Good morning, Zinger Nation and traders on out there. Are you guys ready to get started right here on the best morning show, Pre-Market Prep? I'm excited for today. We got another great show for you guys. We'll talk a little bit about what's going on in the market right now. Earnings on Oracle. We'll touch a little bit about Disney, Spirit, American Airlines, Camping World, ratings, Pfizer, Rivian, Twitter, Chinese stocks. We'll talk a little bit about that. And of course, we'll get into our guest, Michele Schneider, Managing Director of Marketgauge. So stick around, guys. We got another great show for you guys. And like always, hit the thumbs on up, the subscribe button below, and let us know about a catalyst or a stock that's moving that you guys want to check on out. Throw it up in the chat, and let's go ahead. Let's get it started. Welcome to Pre-Market Prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. Let's get it started and bring on Joe Elconin. What's going on, Joe? And let's see those charts, baby.
Yeah. Let's. We just had the 8 o'clock pop out of the blue. I mean, I went to warm up my coffee. We were just about to go red, and then boom, the machine came on at 8 o'clock, and again, buy, and we just got a pop as we were drifting back to unchanged. So we're just going to keep an eye on that close, that all important close, 53.50. Yesterday's low, 35 and a quarter. Why we got up to 38.07.50 overnight? Well, I don't know. That was, I wish I would have woken up in the middle of the night and put an offer out there. But there we are, up 15 and a half handles. Crude steady above 120, up 45 cents, 121.38. Gold continues to deteriorate, down 11.30, 18.20.60. Silver, that's clinging to 21. That's down 19 cents at 21.065. Bitcoin, that's down a G55, 22.060. That's the bad news. The good news is it's $1,300 off its low of 27.75. And Ethereum futures, the leader on the downside. Those NFTs just must be stacking up on the shelves, down $46 at 1178.50. In bring in Triple D. Triple D, you could not have as exciting 8 o'clock today as you did yesterday.
No, I was ready to start the show. I'm all, hedged up, looking good. I like to get all hedged up before I start the show at 8 a.m. So obviously I can focus on talking and not focus on trading. And right at 8 a.m. yesterday, I don't know if you have the pro up there, if you can bring up the headline if you wanted to show it, Mitch, on Benzinga. Yeah. Right at 8 a.m., it gets announced on the pro there, PLD acquiring DRE. And it just so happens, Duke Realty, that I happen to be short DRE right at that exact time at 8 a.m. I happen to be short of coming in. So that was an overnight trade. So I'm like, it sucks when you were short of stock and it gets taken over. So I'm like scrambling, literally diving in there to hit, because it says $26 billion. Okay, well, what's the number? So then I see all stock. Okay, well, that's good news, all stock always, because they usually bring the acquirer down. But I'm like, what's the number? So then I go grab a 0.475. So I'm doing my calculation fast. I'm like, okay, it's like $54.50. It was already trading at 53.5. And I'm like, trying to analyze, what am I going to do here? It's not a huge takeover premium. It is a REIT, but it still sucks. So I'm trying to analyze, and this is why I didn't come on the show, because I'm literally analyzing, am I covering this up at 53.5 or not? The takeout price is worth 54.5. I'm like, well, wait, I'm like thinking we're in this bear market. I'm like, they'll knock PLD probably down for this. And then they do start knocking PLD down. And I decided not to cover it. So I come on the show at like 8:10, just leave it on. For the simple reasons that we're in a bear market. And I was like, I think they'll knock PLD down a bit. I don't think this is going to open up at 53.5. I'm like, maybe 52. Anyway, so I covered a little bit after the show was around 51, but then I left part of it on. The thing opened down at $49.40, and I got the rest covered at $49.40. So you're in a bear market when you are short a stock that gets taken over and it opens down and you make money on it, at least on the back half of the trade. I mean, that is just unbelievable. Good luck to a certain extent, but just shows you how crappy this market is. You're short a stock, gets taken over, you should lose, and you actually make money on the back half of it, which is unbelievable. So, I mean, just wanted to share that story because probably curious why I wasn't on the show yesterday morning. I was doing some quick CFA analysis on that to decide whether I was going to cover it or not. And it was a good call by me to think that they were going to knock PLD down. If you show the chart of PLD, Joel, this is exactly what they did. They sucked the premium out of the PLD so that the risk arbs then aren't going to really pay much for DRE.
Yeah,
you see the PLD chart yesterday getting hit on the acquisition. So sometimes, doing a little bit of a quick analysis can save you some money. So sorry I wasn't with you for the first 10 minutes, but I'm with you today. I want to share that story.
I wondered because it was I looked when you did come on, I looked for headlines.
You're like, what is this?
And I'm like, and I don't even know if I saw the Duke is Duke realty, but just to emphasize your point, like probably 99% of the time you're covering that trade, right?
No paper hands.
Usually quick. I'm trying to be quick to try to get the algos, obviously HFT bots are really quick, but then I'm trying to be one of the quick humans. So you're trying to think, well, it's 54.5. Do I lift the 53? It was a 53 offer. And I'm like, do I lift the 53? $1.50 save? But then you start analyzing time value of money, all stock, bring down PLD. I was like, no. I'm like, I'm not going to lift it. So like I said, I think I covered some of it in the low 51s. But I got the whole back half of the trade covered at 49.40 and actually made, I don't know where it closed, but I made like 60 or 70 cents on the back, or 60 cents on the back half of that, which is unbelievable. So tough market. It's a tough market,
the other thing
but not
too,
for the shorts.
Just the other thing too to add to that is that you didn't add on to it. Like you didn't make the problem worse, right? You could have, and that would have made it better, but instead you just the time that you took to analyze it, it came down. So all right, so we're off to a boring start today. I guess we're all sitting on pins and needles for the PPI number. I don't think the PPI number moved the market as much as the CPI number
at 8:30, coming out at 8:30.
Yeah, it comes out at 8:30.
Yeah, that's something that would definitely be on watch. I mean, it's going to be it's always a number that is watched after the CPI. Some people are relating it closer to what the Fed will keep watch on the numbers. We know that the Fed is more reactionary to what shows up in the data, and so that's why a lot of people are trying to see if there's some relief, at least in PPI, versus another hot number coming in. That's going to be released at 8:30. Analysts expect prices to pay to jump 0.8 from April and 10.9 over the 12 months since last year's May. Definitely going to be on watch. And just to kind of talk about what's being talked right now, and then we can do a little bit deeper talk on this, is that the CME's group Fed Watch traders are now seeing more than 90% chance of a 75 basis point rate hike this week at the Fed Meetings Watch tool. So, hey, what do you guys think?
This was broken by the Wall Street Journal yesterday. Steve Leisman confirming it on CNBC that the 75 basis points is indeed being discussed, is indeed on the table, because we know Powell said, a week and a half ago that they weren't even thinking about 75, but after the data that they got, that it is firmly being discussed. So it does look like they may indeed go 75 basis points. I mean, these rate hikes are killing the market, man. The TINA trade, making capital obviously harder, more expensive. I mean, this is what the Fed is doing on purpose, though. It's such a different market. I mean, we were in this bull raging market the whole time, and every time the market would pull back, the Fed would defend this market. And we talk about the Fed put. I mean, it's not. It's the opposite now. Now you're fighting the Fed. Never fight the Fed. If you're long stocks, you are fighting the Fed right now. I'm going to say it again. There's no reason to get super uber bullish until we start seeing inflation come in. Give us a data point where the inflation is not looking so hot, and that's the time where you start buying stocks. You want to nibble? Sure. You want to go all in on this market just because it's down 20% from the highs? You are still massively fighting the Fed because inflation hasn't even had a lick of a tick down yet. So don't fight the Fed, man.
Yeah, that I will shout out to Ned Davis. Ned Davis, you guys don't know who that is. He puts out he's technical analyst that
He's been
if you
around
guys
for a
want to.
long time.
I've heard
Yeah.
that name.
Yeah, there
Yeah.
you go. I got you guys. So one of his three rules, right? It's don't fight the tape. The trend is your friend. Go with Momo. Don't
Good
fight
rule.
the Fed. The Fed policy influence interest rates and liquidity, and money moves the markets. And beware of crowds at extremes. So I just wanted to kind of mention those three rules. I think it's important to keep those in mind. And you're 100% right, Dennis. Don't fight the Fed and don't fight the tape, guys. And it's looking like everything's pointing to the downside.
And every time you're buying the dip using your 2020 playbook here, you're fighting the Fed and you're being punished for it. And, I've done it too. I mean, you think, okay, well, it's overdone. Let's pick up some stocks. And they rally for a day or two, and then they just turn around and roll over again. And I mean, this last one caught a lot of people because it was vicious and it was fast. But again, we knew that CPI data, we laid it out for you guys basically 2 weeks in advance, but we laid it out. If the number was hot, it was gonna get ugly, and that is exactly what has occurred. And it's been 3 straight days of punishing sell-offs because the market is like crap. You just went from a 50 basis point hike to a 75 basis point hike. This is the root of the problem, higher interest rates. But the root of the problem is inflation. You have to get the higher interest rates to beat the inflation. So Fed has to do it. Fed is literally going to bring us into a recession to stop inflation, but I think they have to do it.
And the interesting thing, too, is that the market sensed it pretty well because we actually broke down on the day before.
They did.
It did. The
Yeah.
market,
Well,
the market. Yep.
that was the European numbers, right? Giving us a little bit of a warning flag early. I think they gave us the heads up, like, hey, inflation isn't slowing over here in Europe, and I think traders started getting ahead of it.
Anyways, let's bring it back into the markets. I
go
want
to
to
the
talk
earnings.
Bitcoin just for a second before we get
Bitcoin.
to Oracle.
Bitcoin. Is there anything left in the Bitcoin?
It's ugly, man. And I mean,
yeah,
Shut down your Twitter feed. Go ahead.
this throwing all your eggs in one basket, like the MSTR CEO. He was talking. I watched a video of somebody, market friend of mine on Twitter there. Thanks for sending me the video, just showing me, that he had this interview, and he's, recommending to people, or was recommending to people, to not only put all of their money into Bitcoin, but to leverage their assets to buy more Bitcoin. I mean, this is the MSTR CEO that, is, just all in. And we know they're levered into Bitcoin. We know at 21,000, they're going to get some margin calls. They're going to have to put up more capital. I mean, this is just crazy. Yeah. I mean, it's one thing to believe and to put a good portion of your money into something. It's another thing to lever up and to go all in. I mean, I guess that's the way you get rich. I mean, is you go all in on something.
Rich or poor, one of those.
Rich or poor. There's no in between. You go all in, you're going to be rich or you're going to be poor. I've always played the diversified approach, where you diversify and you play it that way. But I mean, you look here, and the argument that they give is the scarcity argument. I hear this on my Twitter feed. I had to mute Bitcoin, but it's literally the argument for the last 5 years or 3 years. We've just been hearing Bitcoin scarce. There's only 21 million. Everybody's going to need some. There's only 21 million. Mm-hmm. I'm just going to say it again. I've given this argument, but not probably in over a year. Is an asset really scarce when you can divide it into 100 million pieces? So this 21 million Bitcoin, there's not really 21 million. There's really more like 21 million times 100 million. So, I mean, and then there's, different ways to divide this apparently as well. So, I mean, this Bitcoin scarcity argument is a very poor reason to own Bitcoin. If you want to own Bitcoin and you believe we're going to transact in it, you believe it's going to be, the money of the future, that's a different story. But if you're owning Bitcoin just because you think it is scarce, I'm going to tell you you're wrong. Bitcoin is not scarce. It can be divided up into little things like, like Kevin Kelly was saying, the baseball cards, some of them are scarce too. And I'm like, yeah, well, cut your baseball card up into 100 million pieces and see what it's worth. So, I mean, when something is divisible to that extreme, it is not scarce. So this Bitcoin argument that Bitcoin is scarce is a very uninformed argument.
Don't we have that though right now with fractionals on like stocks?
Yeah, well, they divide those up too now. They're fractional shares, but I've never seen them divide them into 100 million pieces. Their money, Mitch.
I mean, I'm just wondering because I'm just trying to see. Like, I think the same would exist there with the market structures and fractionals,
But
right?
100 million pieces. I mean, this is
I mean, yeah, it's more
seriously divisible.
higher and higher afloat there. But I'm just seeing it like that. Like, yeah, there's still a finite amount. It's just more. It's an insane number. That's what you're saying here.
So my 2 points: one, I believe that Bitcoin is not scarce. Two, this argument's to go all in and mortgage your house and put everything in there.
Yeah,
I mean, this is scary. I know, and I've, my one friend at Bright Trading, he's got the cousin that literally mortgaged 4 houses to buy Bitcoin, and I'm like, holy man. I'm like, these are like what the horror stories of 1999 or 2000, 2001, 2002 are made of. Maybe he's going to be right, and maybe Bitcoin's going to 1 million, and maybe they're all going to get rich. But what if it doesn't? Do you want to start over? So you want to own Bitcoin? I have no problem with you owning Bitcoin. I have a big problem if you're taking all of your money and mortgaging your house and putting it in there. I think you're going to regret that decision, but who knows? Like obviously the MSTR CEO, he may end up being right. And maybe Bitcoin is going to, $1 million, and MSTR is going to be the most valuable company in the world because of that. I don't know. But I mean, right now, MSTR is getting punished severely.
Again,
and that is because they're all in. This was $1,315. It's now $139. It's down 90% from the highs. And if you start seeing Bitcoin fall under 20,000, those margin calls are coming.
It's definitely something to keep on watch. The question I would say is, can they even make it to the next wave up on Bitcoin? And that's really the concern, is that they might disappear before that next time, right? And so I think that, hey.
Yeah, when you get all levered up, can you hold to those pullbacks, Mitch? I mean, that's what I'd be concerned
about,
This is in the stocks as well. What's the famous saying? The market can stay irrational much longer than you can stay solvent.
And I've seen that,
is the market even irrational? There's an argument there. I mean, maybe it is, but we had a lot of excess. And how do you value the thing? I mean, I think I value a lot of those cryptocurrencies as zero. I don't value Bitcoin as zero. I believe there is value. I've said that before. I have a little small piece, in the one account there. Just, I sold the majority of it. I sold 95%, but I kept one little small piece, and I've obviously, I'm playing with Complete House's money on that, just in case, it does go to 1 million. But I mean, to come in here and say, yeah, I'm going to buy at 22,000 because this is going to be back at 60,000 or 100,000 by the end of the year and make so much money. Just have your contingency plan, because if this thing starts going, and I believe Bitcoin can go to 10,000. I said this on the show when it was at 30 or 35. I think it can go to 10,000. It can go anywhere. I mean, no, these projections are just throwing numbers at the wall because there's nothing to value. So, I mean, but there's just so much poor sentiment towards crypto. You have all these people caught bag holding everything. I mean, there's just Joel, the bag holder argument on crypto.
Market structure, baby, on the way up. It's going to be a whole different market. And when did those ETFs come out? I mean, just to put a whole just to bring a whole nother, aspect. I don't even look at those.
I don't think they helped.
Yeah,
I don't think they helped.
No, you're suckering. You're bringing in more investors into an asset class that's obviously, it's made it easier to buy Bitcoin.
Yeah.
So, I mean, that's the argument too, is before, 10 years ago, we had these 90% pullbacks. The masses weren't in. The masses are in here now. Don't kid yourself. It's not like nobody's heard of Bitcoin. Everybody has heard of Bitcoin. Mm-hmm. The masses are in. When you go to your barber shop and your barber's telling you, you got to buy some of this Bitcoin, that's usually the sign that you got to sell. Usually when it gets to your barber or your hairdresser and they're giving you the hot stock tip, that is usually the one you sell.
Taxi driver.
So I think everybody got in. We went from 10,000 to 60,000 in a matter of a few months. It was a crazy move. It was a crazy move.
I have a very similar story. My wife's best friend, her husband was asking her like, "Oh, should I get into Bitcoin now?" And then it was like 2 months ago, and I was like, you might want to just do a little bit more research, at least in the time that we're in. But let's go over to earnings. Let's get into Oracle.
Let's get into real stocks.
Let's go
real
into stocks.
Let's
go to
money.
Oracle here. Oracle, not too bad reporting after Monday's closing bell. Of course, this came abroad, a sell-off that we just had. The news was good. it actually sent Oracle shares up 9% here. Earnings per share were at $1.54 adjusted and beat the expectation of the EPS of $1.37. Revenue was at $11.84 billion, beating the expectations of revenues at $11.6 billion. And noted, of course, this came from their clouding computing demand, as we're seeing, of course, kind of at-home workers go back into the office, but definitely Oracle's cloud demand increasing there.
This is a real company making real money with real cash flows. I said on the show yesterday, I'd love it if it got down to 60 to buy it. It was at 64. I wasn't buying it ahead of the report because that's obviously a coin flip. And, it would have been a good call. It's bounced up. I think Oracle's a good company. We're on a bull market, though, so you don't want to buy it now after it's up 11% here this morning. So, I mean, this is, there's a time and place, but we're not buying rips in bull markets. We're buying dips. So, I mean, if you were buying it yesterday, congratulations. I'd sell it. I'd actually take the quick 11% and get out quickly, because now you're right back up in all this, overhead supply area there. But, as much as, I do think this is a company that if you're buying it even at 71, you're holding it for 5 years, I do think you make money. I think you're going to get cheaper now, though, because obviously, maybe we get it like a double bottom. Maybe the market starts to get more ugly. Maybe we come back to 64, 65. It's been the kind of market where stocks rally on their good reports, and then 3 days later, they're back down. So I'm not chasing here, because chasing has not worked in 2022.
Yeah, you got some heavy lifting to do to get up to that pre-market high. Let's call it the after-hours high at 73.70, and then it's just been kind of a slow leak. People taking profits that bought it over the last 3 days. Depends when you bought it on that third day, so they're getting out for a scratch. There was a chart yesterday that it hit the pre-market high, and it kind of had the similar pattern. I think it was Bluebird Bio. We never even got to that yesterday. But you had this when you hit an excessive level, and then you just kind of hang in there in the pre-market, like around the support area. If you lose that support, that's what happened. So I'm just going to go with, I know they're totally unrelated companies here, but if it holds 71 and a quarter here, then you can challenge some of your daily highs, and you can see them at 72 and then a little bit higher in the 72 handle. Under 71, where do you go with this stock? I know, like, Jeremy has ways to buy stocks on gap ups like this. I don't have it. So important to hold 71 and a quarter.
Yeah, I think a good company. I just think this is not the market. Like that Bluebird Bio report, and I'm a bag holder in Bluebird Bio. Long-term account, been an awful stock. We know I bought it because Kite got taken over, another one taken over. I thought Bluebird, and it's just slowly been death by 1,000 cuts, and that's just been a biggest bag holder. I think it's the stock I'm down the most in. And even when they come out with good news, good drug, and they actually was great news, that this market just can't hold gains. This market just sells first, ask questions later. They don't care, that the drug's good. They don't care that the trials. They don't care about Oracle's, good earnings. Will start to probably leak that too. I mean, this market is just so many money managers that are in trouble and looking to raise cash that every time they've got a stock that rallies, they come in and they start selling. And that's retail too. Retail has been hammered on this recent sell-off. If you didn't get hammered the first time, this last 3 days has really hammered them. So anybody who's holding it is looking for stocks that, because they don't like taking losers. So if it pops up, they're going to sell. So, I mean, that's just the mentality of this market. Should they sell the Oracle report? Probably not, but that seems to be what happens.
Definitely something to keep on watch. We'll see what happens with Oracle towards the bell. Let's go ahead. Let's keep it going here. I got a lot of these kind of smaller headlines here. They're not moving the stock too much, but let's go ahead. Let's start rolling through some of these. Let's get into Disney. Disneytown and Shanghai Disneyland Hotel will resume operation in June 16. So it looks like they're starting to relieve some of the restrictions from Disneytown and Disneyland. So the park itself isn't open yet. And so my question is, I mean, how many people are going to be going to the hotel if the park's not open? But they're definitely still struggling here, Disney.
Yeah, and this is just a victim of the overall market as well. I mean, this is what we're in. I mean, if we are going into a recession, people might cancel the Disney World trip. And I've been dead wrong on this. I've felt that there's been value. I started buying early, average cost base is like $118 on this thing. I'm $96. I do believe if I hold Disney for the next decade, I believe I'm going to make money. Bluebird Bio, I'm not going to make money. I'm going to eventually sell that and lose on that. But the Disney, I do believe eventually this one's coming back. It's one of the biggest positions of my long-term portfolio. Dead wrong about it. Dead wrong. We're the only people.
Wait, you're
that
on
actually admit when
Twitter.
we're
You're
wrong.
on Twitter. You don't have losing trades, Dennis. Come on now.
No, I know. You're not supposed to admit you're losing. I've been dead wrong on Disney all the way down here. I bought it 3 or 4 times, and every time it's just been cut. It makes new lows. So, I mean, it's hard to buy stocks, Brian Shannon, great follow on Twitter. He's like, don't buy stocks in downtrends. That's great advice. Honestly, it is. I've got the value thing, and you try to be a hero, but the stock has been trending down. There's really no reason to buy a lot of stocks here at all, which is probably why the market has so much trouble. I mean, yes, there's value in some stocks, and yes, I do believe Disney eventually will figure it out. I do believe they're going to be a huge player in the metaverse. I do believe that they're going to eventually reinstate their dividend. I do believe there's good news coming. But we're going to a recession. This Disney stock can go lower.
All right, let's keep it going. You guys just kind of mentioned, what about the bots and Twitter and things like that? I did see some Twitter mentions on out there. Twitter rising about 2.7% following news that Elon Musk will be attending an all-hands employee meeting on Thursday. Also mentions out there right now are that the EU policy is kind of looking at stocks like, let's say, Google, Twitter, the different social apps to kind of keep on watch of the bots. So they're supposedly going to get fined if they don't report in a certain manner. So this is also just kind of increasing more and more, I think, the possibility of Elon Musk getting maybe a true answer from Twitter on the bots. We'll see what happens there.
It's just a binary event. I mean, the best case scenario is 54.40 or whatever it is. Vote is 54.40? No, 54.20 because of the 420 thing. It's just ridiculous in itself. So 54.20. It's the best case scenario. The likely scenario, I think, is that it's going to be a discounted deal where, okay, well, we'll make a deal, but you're still going to buy it. The worst case scenario is Musk gets out of this deal, pays his breakup fee, or, gets out of the deal without paying the breakup fee. And in that scenario where Twitter, don't think about like it was $37 for this deal. You look at Snapchat, where it is now. You look at Pinterest, where it is now. There's an argument to be made that if this deal falls apart or if Musk finds a way out, I think Twitter is not only a $25 stock, I think it's a $20 stock. So I think there's 17, and I keep moving that price down because the market keeps going down. But Twitter is being held up because of the risk arbs right now. If that deal falls apart, I think Twitter is $20. So I think there's 17 points down in the event that Musk gets out of the deal. There's about, about 17 points of upside. So right at this point in time, it's a coin flip. What's going to happen? They're going to go to courts. It's going to get in court. There's time value of money to consider here too. Obviously, time value of money was never in consideration 2 years ago. But with inflation clocking over 8% and interest rates climbing, that's a consideration here as well. I'm out. Not getting near it. It's too much.
All right, Dennis, go. Dennis,
go
Dennis,
wide. Go wide,
wide,
my
baby.
friend.
Go
wide,
wide,
baby.
That's too late. It's 5 seconds.
Going wide, baby. Going wide. All right.
5 seconds only you gave me on that. That wasn't a heads up.
That's enough. 5 seconds too early, man. All right, we'll see right here. There we go. I'll let Dennis go ahead and do his thing in the background. We're watching here the numbers here. Let's see how it hits the tape. And looks like we're getting a little bit of a movement before there. There you go. Let's see what happens here. I don't see it hitting the tape just yet. I'll be looking for it. Let me know if Joel, if you see it there. Looking to see what we get here. Of course, the numbers that were expected was a 0.8 from April and a 10.9 over the 12 months. Let's see what we get here. All right, there we go. We're getting May 8.3 versus 8.6. The prior was 8.8 there. So year over year, let me go ahead and throw that up here so you guys can see that. I'll throw it up on a banner here. There's the core coming on in here at May at 8.3 there versus the 8.6.
Jumped the gun. I went to the 1 minute. They jumped it ahead of time, and now I'm back. It's in line. I mean, that's the market's really looking for any kind of good news here. So we're getting a little bit of a pop, and we're actually kind of holding in here. So the jump the gunners are the co-locators took it up to 75 and a quarter. And it looks like a decent number. I mean, the food and energy 0.5 versus 0.6. So a market looking for a little bit of good news. You're getting it. The question is will the rally be able to hold? And as we speak right now, it's moving up a little bit. We moved up. Where did we start this bracket? We started at 64. So little bit of a rally. I mean, what else can I say? Mid-range under session, that's what you really need to clear. That comes in at 81. We do that, who knows? Maybe those buyers overnight were anticipating correctly. There is trying to get through 75 and PPI helping us out, being our friend as opposed to the CPI.
Yeah, it looks like the estimates that I had on the other one were a little bit different than I have here on these numbers, but the estimate here was 0.6, May 0.5 there, so off by 0.1. Prior was 0.4, so it still went up month over month, but it beat the expectations by 0.1 there. I think this isn't too much here. To me, it's just falling off by like a 0.1. We'll see what happens there to see if we actually get a reaction that continues. Right now, it looks like stocks are getting a little bit of a bounce, so we'll see if this can continue. In a second, we'll be getting into it in our interview with Mish Schneider. If you guys stay tuned for that, looks like we're getting on up there. It's continued green. Let's see if we
Bank
continue green into the
America.
open there.
I'm just trying to look at the stocks, Bank America not really moving off it. JP Morgan, looking at the bank stocks, this is could mean something for interest rates. Bank. Now I'm trying to see what they actually bought here. I don't know. Did Tech move off at all? Did Apple get a little move off this? It seems like they just bought the indexes here pretty much, trying to get a feel. Apple got a little pop and a little fade. Let's check. Microsoft. Same kind of thing, just a little pop and a little fade. So right now, so far, so good. We'll see what Triple D, because I'm looking at my stocks here, my big stocks, and they're not flashing. They're not moving up. So I think you kind of have just people are kind of shell shocked after the last couple of days, and a little bit tepid here, going out and lifting offers off one number. I don't know what this does to the 3/4, versus the half argument.
Doesn't do anything.
No, I don't.
Yeah, that's what I felt. It didn't do much there.
It's getting a little bit of a lift. The number wasn't that bad, but this isn't going to change the Feds. I don't even think they're going to consider this. So I think you're still looking. I think you're looking at 75 basis points. You got a little bit of a lift here. We're going to chop around. I mean, we have a lot of air everywhere, and we have to consider that. I mean, 3 days ago, we were at 410 on SPY. So you're talking about, this is an incredible 10% fall in 3 days, Joel. I mean, this is the SPY. This isn't like some stock. Literally, the S&Ps have fallen 10% in 3 days. Is that right?
Yeah, you're right. It was like 9 point something, but I think you're right.
35. Holy, that's like it's an impressive sell-off. So you're going to chop around. I do think as you rally significantly, I think you got to be selling into the rallies, because I think there's more pain ahead. I don't think we've seen the lows on the S&P. We broke down new lows. Nothing is easy for the shorts. Everybody thinks the short stocks make money. It's never easy. Never easy on the shorts. They'll rip them higher. They'll shake you out, and then they'll take them down afterwards. So it's never that easy. So we're getting a little bit of a rally here, and I don't know where it stops or anything like that. But maybe yesterday's high is a good stopping point. I don't think you're getting there at 381. It's a long way away.
Yes.
40 candles higher.
Yeah. Well, the Globex high is way above that.
FedEx, big move here in FedEx. Just to talk this right now, they're increasing the dividend. Looks like they're doing a whole bunch of things here. Mitch, if you want to grab it from the pro.
Yeah, I can go ahead and grab that.
Congestion here at 220, folks. We'll see what happens here. I'm just looking real quick. What jumps out at me right away is these 3 daily highs at 220. Everyone, 220 to 222. Everyone getting their money back from that big decline. We'll see if that area holds. I see.
Can you believe how crazy these algos are? I mean, it's good. Dividends up and everything, but where did they just buy this? They just buy it to 220? 222. I don't think it's going to go above that today. 221.
220
This kind of
95.
market, you sell rips into this market. You sell. This is, you know, what I'm doing anyways. I think this is what you should be doing, is selling rips in this market. It gets right up in all that congestion, Joel, like you just pointed out. They're stupid enough to buy it into all that congestion. Somebody's stupid enough to buy it into all that congestion after just rally 10%, they deserve to lose money. So use your charts. They're the tools in your toolbox. But I mean, chasing in this environment has been punished. Now, is FedEx going to be up today? Yeah. But 22 points right there. I think you get back up there again. I think you use that as a selling opportunity. I think it's going to have trouble again at 226, 225, 226, 227. So like 217, maybe you can get up there again, but hard to chase stocks.
Get your money back. I mean, instantly. You got your money back from 3 days of pain, of absolute torture and pain.
Yeah, and they give it all back to you just like that. It's
all right,
the
I
kind
see
of market
Mish in
that
the
gains
background
do
here.
not hold.
Let's bring on Mish.
All right, let's go ahead. Let's get towards that. Of course, you know, sometimes we'll have some breaking news, but let's go to it. Let's get on Mish here. Let me get her banner ready here. Mish Schneider, Managing Director of Marketgauge. Welcome to the show.
Hi, guys. Good morning.
Good morning.
Right.
Good morning. Let's get it started.
Just off the top here, the PPI data, the Fed. It's been a while since we had you on. We could talk about the Modern Family in a little bit, but just give us your quick appraisal here of the recent data, the market reaction, the Fed. What are you looking at, Mish?
Well, there's so much to unpack. So if we just start with the inflation numbers with the CPI last week and the PPI today, we have to remember that it excludes food and energy for the most part. And so that to me makes it very questionable in terms of how valid the numbers are. In fact, I know that the numbers on the CPI are often arbitrary in that they'll do something like ask a survey of people. If you were to rent your house right now, what would you rent it for? And that's what they base their number on, even though rentals we know are up like 15, 20% over the course of the last year. So I think the bigger takeaway is we all know there's inflation. And we all know that the inflation, where people focused on a lot of the industrial metals and the car market and the housing market, they may have plateaued to a degree, and I'm going to hold off my prediction on where they go. But let's say they've plateaued. Historically, even in the 70s, those areas, including lumber and copper, they plateaued. But food and oil, do not believe have peaked. And so I think that's really where the trouble is going to come from down the road, is as food prices continue to escalate, and as oil prices continue to escalate. And the last thing I'm going to say about that, when we could talk about the impact on the market after, but is that this inflation is different than other inflationary periods. This inflation is based on supply side and war inflation. And I think those are two things that people sort of don't put in their heads. Supply side inflation is not supply chain. There's a difference. Supply side means literally that there is a problem with supply. So even if demand goes down to a degree, there are two things you cannot really ever go down too much in demand. And of course, that's oil, at least not at this point in time, and certainly not food. And war inflation with Ukraine really basically wreaks havoc on both of those areas. So that's kind of the umbrella that we're sitting under right now.
Okay. All right. So moving forward, I mean, the classifications here of a bear market and the characteristics, even though we've had a bear market and a lot of stocks for a long time here, you know, in your terms, in your technical terms, I mean, where are we at? Do you have some projections for the S&Ps? Do you want to go into the Modern Family? And is there any turbulence in the Modern Family? Is everyone getting along? Is anyone behaving well or not?
Well, actually, are we sharing screens?
Yes, go right ahead. Yes.
Okay, because I wanted to show you this in my Modern Family. Hold on.
It should be on the bottom there. And
all right, hold on. I wanted to get in there first. And now let me go back to where you guys were. Okay. Where is my... Okay, so now I'm back. So let me go share. And why is it not giving me any options on where to share?
We'll get Money Mitch on here.
There should
Share
be a
screen.
plus button down at the bottom there.
Okay, share screen. And what I want to do is, all right, I see what I have to do is I'm gonna change that. I'm sorry. Let me just change that to my
No worries. You let us know when you're ready.
ready.
Meanwhile,
Ready?
the market is ripping. We are now
Like
trading
that
by
PPI
31 and a half handles here at 37.85 and a half. So they are liking the data here. Now moving up over mid range on the session at 81. So you all set, Mish?
I'm all set. So
Okay,
you can see,
take it away.
This is 6 members of the Economic Modern family. Bitcoin would actually be our 7th member that we added a while
You're
ago.
not kicking it out of the family?
No, I'm keeping it in the family because right now it's so interesting. So here's what I love about this. So, we were, I don't know when was last time I was on the show, but I've been on lots of media, as you know. And I saw back in October, November that we had that big run up in both the retail ETF and in the IWM, the Russell 2000, and immediately broke down before the SPY and the Qs did. So as far as we were concerned, the market already was showing stress and signs of a top. As soon as it had broken out of the range and then collapsed under that range, we were like, okay, this is bad. And at the same time, you can see that biotech had already been breaking down. And of course, typical to semiconductors, they seem to be the last to get the message. And the same thing with transportation, because it was right at the time where people still had somewhat of a hope that not only were we going to come back strong from COVID, but there'd be some kind of, infrastructure spending. And then, of course, KRE was also kind of the last to get the clue because people were thinking, oh, higher interest rates that are coming are going to be good for the banking system. So that's the history here. So now where we are right now is since then, of course, you can see IWM has broken not only the 50-week, but also now, as of yesterday, it was the 200-week. What's interesting to me is the biotech, because this low right here, which is at around 105.97-ish, I think if that's respected, we could actually even start thinking about a double bottom if we get through 110. And I would not be surprised because in 2009, biotech was the first one to bottom. Semiconductors is sort of in middle and nowhere here. It's probably one of the least interesting areas to me because of not only the fact that obviously big tech is going to have a big response continuing to the higher rates, but also there's still the China-Taiwan situation sitting out there. And IYT broke down, but we can see what happens here by the end of the week. So let's, to me, look at this one. This is the most interesting to me right now because the whole basis on the pinch of inflation and the food and the oil inflation has been on the consumer, obviously, and consumer confidence, as you know, fell to record lows last week. But what's so interesting to me is that our little old granny retail, and of course, a lot of this has staples in the ETF, but it also has some discretionary in there as well, and obviously e-commerce in there as well, landed on the 200-week moving average yesterday. So what that tells me is that this is in a situation right now where if this can hold as we get through, we just got through PPI, as we get through the Fed, and everybody's looking for this 75 basis points, I may be in the minority here to think that they may only go with 50 basis points because basically that's what they said they were going to do. And one thing I have found about this Fed is that you kind of can take them for face value. And even though now they're, of course, with egg on their face about inflation, they said that they were going to raise multiple times. They didn't say they were going to raise by 75 basis points multiple times. They said they were going to raise by 50 basis points. So that's the only thing. Would I be shocked if it's 75? No. Do I think the market's sort of half expecting that? Yeah. But I actually think that could be a surprise. And that supports one thing you asked me about what my overall feeling is the market is this is kind of typical of a stagflation environment right here, in that we get into a bottom, we get into a trading range. I heard, I think Mitch, was it you said that you want to sell rips? That's absolutely correct in a trading range, but you also want to buy extreme dips. And this could be an extreme dip. that we buy with a somewhat of a rally, that would be an opportunity to sell. So if we just look at XRT, and it could be that the Fed only does 50 basis points. And, we wake up on what happens after Wednesday, we can wake up Thursday morning and we get some kind of gap. Do I think that this can go back up to 70? Yeah. Best case scenario would be 80. I doubt that happens. I would say if this can hold, and XRT can lead this market, because let's face it, consumers are still, even though their confidence is down, there's still a hopefulness that we're going to get through this and things are going to get cheaper. That's where we can go. So that's kind of my thing, is watch XRT. I think right now it's the most important member of the family, more than anybody else except for Bitcoin. And if it holds this 200-week moving average, there's a bounce coming. How big the bounce? 70, 75 maybe, but that doesn't mean bull market. It just means bear market rally and another opportunity probably at some point when the new inflation numbers come out next month, or food continues to go up, or gas continues to go up. Then we start going into another slide, and then we can see what happens back at that 200-week. Does that make sense?
It sure does. It sure does. So you think the market, so you're looking for a half, and you think the market is going to react potentially positive to that. I mean, as always, like when people come out with their year-end predictions and things like that. I mean, I just try and take it day by day. I mean, is that low from yesterday 40 handles off it? Is that a major low? Well, it's got to hold one day. It's got to hold 2 days, and then we got to get back over the former low of the move at 38.10. It's just incremental. But you said Bitcoin's really interesting to you. What's interesting? Are
Let
you
me show you.
shorted? Yeah.
No, we've been absolutely flat. We
Okay.
have not traded any of the cryptocurrencies or Bitcoin in quite some time.
Okay.
Let me
I'll
just
put
get
you in
the
the
right-
background for a second so you can fix that up. Let me know when you're ready.
I'm ready.
All right, putting it up.
I move fast, guys.
Let's go.
Fast market.
Well, first, I just want to make a point to what Joel, you just said. The difference between you and me and many others, but really the bulk of the people, or the herd mentality people, is you and I are traders. We've been trading forever. And this is really a trader's market if you know what you're doing and if you're patient. And right, if you just say, well, this point looks like a good risk point, and I'm going to be able to get a pop from here. And if the pop is great, you start taking profit. If the pop starts to turn, you get the heck out, and that's the end of it. That's the only way to make money right now, I think, in this market for the whole, probably, maybe for years to come.
Sure.
It's these buy and hold passive investors that are really finding out that, I mean, I don't even think they're finding out. Actually, I take that back. I think they're still drinking the Kool-Aid that these big companies with the great balance sheets could only do well. And if you just hang out there, eventually you'll be right. But I think if you're long Apple, let's say at 185, and now it's trading at around 130, 135, maybe it can go to 150, and it could sit between like 125 and 150 for years.
Yeah.
It could take years for those people to get to break even, let alone make money, right? So yeah, I've been really, really, really trying to speak to anybody who will listen that's a passive investor who's told by their financial planners, you only lose when you sell. Just hang tight. This will be over in a few months.
That's what everybody thinks, and it was built. I mean, we've had a 10-year raging bull market too, where if you've started the markets in the last 10 years, we had the COVID thing where the stocks went down really fast, but they came right back. So everybody who bought that dip was rewarded too. But we've relentlessly rewarded the dip buyers for a decade here. And maybe times are different now.
Well, they are different, because one of the reasons why these people were rewarded was because we had a dovish Fed. We had accommodation since really 2008, and even kind of before that. Mm-hmm. When you go back to the dot-com bubble, the Fed has come in to save the day every time. And that's not what they're going to do right now. And it could be for years to come until things get more stabilized or valuations get to a more sane place. Valuations, PE ratios went to all-time highs. Money supply, as you know, went to all-time highs. The spread, the ratio between commodities and equities went to all-time lows. And so that's why I still think we're in a super cycle of commodities. Now, again, that doesn't mean that we can't see rallies and be in this range. If you go back to the 70s, you see exactly that's what's happened. And us nimble traders could make some money. But investors, if they don't get creative, they're in for a pretty hard time. Now, let's just take a look at Bitcoin, because Bitcoin has that same 200-week moving average here. You can see that?
Yep.
Bitcoin's really important, especially if you look at it in tandem with retail, because basically the retail investor has been buying Bitcoin along the way. Number one, obviously, they've had to have some massive liquidation. There's talk that MicroStrategy at some point will puke, and of course, that wouldn't be good for the market. But at this point right now, if XRT can hold and Bitcoin can close above its 200-week, which is just slightly above here at around 22.3, 22.4, and I say weekly close, today's only Tuesday, then it's also possible that that too can get a relief rally maybe to 27, maybe to 29, maybe even to 30. Again, that doesn't mean I think Bitcoin will go up and make new highs, but you got to be aware of these ranges and play them intelligently.
Love it there. Definitely played intelligently. I'll repeat it there. Thank you, Mish Schneider, joining us here, Managing Director at Marketgauge. I appreciated showing the family, and we'll keep an eye on that modern family.
Thank you so much, guys.
Thanks,
Thanks,
Mish.
Mish.
Talk to you again soon. Well, we had a little bit of a rally there. Got over mid-range, only temporarily. Back down, kind of where we started from, but where that number was. I mean, can I call an inside day triple?
I think you pulled it down there for a second there.
All right, bring it back up.
Bring it back. Bring it back.
I think you can call. I think you're right, Joel. I think inside day, we're right in the middle of yesterday's range. I mean, we've had 3 days of relentless selling, so there's going to be a little bit of the buy the dip mentality come and try to come in here. We get a little bit of rally overnight coming back in. I think chop. I think we're going to be very choppy. I don't think we're rallying right back to 385 S&P. I don't think we're crashing and having the fourth down day of we've had 3 heavy down days here. So I think it's time for the market to maybe pause, take a breather. I think inside day is a call.
Take a breather before the FOMC meeting, right?
That's it. And again, we have another event, another market moving event. And I don't even know how they respond. I know Misha's saying they might go 50 and they might go 75. I mean, obviously consensus now they go 75. But let's just throw out the scenarios. They go 50. Does the market rally on that? Or does the market say, oh my God, you don't have any guts. We're never going to beat this inflation problem. So I'm not even sure we rally if we go 50, which is crazy to think. You logically think, they go 50 instead of 75, we're going to rip. But I don't know. It's a type of market that I'm not even sure if I had their paper in front of me, I'd know how to trade it right now.
I say they're in a tough spot here. I don't think they're either way.
So,
I mean,
Mitch.
What if they went up higher than that 75 basis points? What if they went to 100 basis points?
That's not happening. There's no way they're going to go 100. That's what Kramer wants.
I've heard mentions out there. I remember when I first started bringing in the 75 points, everyone looked at me crazy. I mean, who knows if we're leaning towards that 1 point?
No, 100. They're not going 100 tomorrow. Maybe it's in the cards for the future, but they're not going 100 tomorrow.
But I do agree that you kind of keep on watch to see what happens if 50 does show up, because
I think they're going 75. I think the data is there to go 75. I think if they go 50, I'm not even sure we rally off of it. So I think the market's expecting 75. Maybe you just go with what the market is expecting now. Mm-hmm. You don't get crazy and go 100. You don't go 50 and say that you're not tough enough to beat inflation. You're probably going 75. So I think it goes 75. I don't know what the market's response to any of it is, though. This is a tough market to call here. It's a tough market to call the next minute, Joel, let alone the next day or 2 days. Today, I think it's going to be chop. I think you're fading moves today. I think you're going to see a lot of chop. Tomorrow after the FOMC meeting, could go anywhere.
Well, we'll have our man Blue on tomorrow, Blue Putnam. And boy, oh boy, Dennis, when we talked to him and you asked the question about how long does it take for the data, for the interest rates, and he was not optimistic about.
He thought that interest rates could take 9 months to get the interest rates really bringing down the inflation. And that's when I was like, oh, man. And then we've had 2 reports since then, and both have been hot still. So he's been right. Blue's been right. Yeah. Those interest rates go up, but it takes a while to kill the spend. It takes a while to kill the demand, and that's what they're trying to do. It's going to happen. Don't kid yourself. If you keep raising rates, eventually demand destruction does occur, and the Fed is doing that. But as much as the Fed, to Mish's point, was behind this market for the last decade and even further, this Fed is now fighting this market, and that is not good news if you're long stocks.
Yeah, and it's always one thing to remember is that the Fed tries to be data dependent, and until the data changes, they're going to probably be behind the ball, or some people at least will say so. Another thing that I did see out there, just to kind of change it on up, talk about something else here, 4 minutes before 9 a.m. here. I did see automakers putting out requests there, CEOs, GM, Ford, and other automakers urging Congress to lift 7,500 electric vehicle tax credit cap. So pretty much, I mean, I'm sure they're referring this a little bit to the inflation that's out there, and they're like, well, we're going to need a little bit more help to kind of get these EVs out of here. So if you could help us out by maybe increasing this credit cap, maybe we can start getting these vehicles to actually start rolling here.
The automotives are in a world of pain, and yes, GM and Ford are going to be big EV players, and it's going to be a help down the road. But right now, there is nobody buying, very few people excited to go out and buy a new car. There's very few people to do that. One, a lot of people don't have the money to do it. Two, is the prices are insane. As much as you can pass through input costs on food, certain things like, you can't pass it through on cars, and people just will buy less. They're driving, not buying a new car every 3 years. The financing, I mean, we were spoiled with 0% financing. These automotive companies, I should say, have been spoiled with 0% financing for a long time. The financing on some of these cars is 7-8% now. I'm not joking.
Ouch.
It's insane. So, I mean, you start just adding all that up. Oh, yeah, your car's 50% more, and we're not doing 0% for you. We're going to do, 7% or 6%, 7% financing on you. And we're not going to give you any discount on the sticker price because there's supply issues here. So you're going to have to pay the sticker price as well. Well, you know what I say? I'll drive my car another year. And a lot of people are saying that's why you're seeing the automotive stocks just continue to get pummeled. I don't know where it stops. There is value here. I do agree. I just don't know how. The demand destruction is already occurring in the automotives, and it's not going away anytime soon.
Definitely agree. And one of the things that I'll put out a warning flag on out there is for companies like Fisker that are supposedly to release their vehicle in November this year. So just be careful on out there. Who knows?
I still like the Fisker story. I still think there's a story here, but I'm not buying. I don't want to own automotive companies right now. I think there's a story here. I think Fisker is not a zero. I think a lot of these EV companies are zeros. I think Fisker with the Magna deal, I think they're going to be in production. You're going to see these cars on the road. I think they are going to be a player in EV. The cars look pretty cool. It's got a good name. I do believe Henrik Fisker is a smart person, very smart. The stock is, the one thing they're going to do is probably another offering is a problem. Like they're going to have to raise more capital. So that's, one thing that's holding them back. If you bought it $8, you're going to make money. It's hard to say. I mean, I don't know where the market cap is on this thing. $3 billion now, $2 billion. I haven't even looked at it for a while. I haven't owned it for a while. I do want to get eventually back into Fisker. I don't want to be early on this trade though, because you could be early and this thing could be at $4 on you, and then it goes to $6, and you're like, you bought it at $8, and that's no good at all. So I don't want to be early here. I do believe that Fisker is not a zero though.
All right, it's 9 a.m. and I'll sneak in one more there. Joel's probably getting on out of here. You guys know where Joel will be at PreMarket Prep Plus. If you guys want to go through some tickers, definitely join Joel Elconin on there. But Rivian released today that they could be facing setbacks in its R1S SUV that was launched in December. The delivery schedules for the R1S have been pushed back from anywhere between 1 month to 9 months, said Auto Evolution, citing a letter that Rivian sent to the reservation holders and information shared amongst forum members. So continued struggle out there. Even when they want to get the cars out, they're not being able to get them out, it seems like.
I mean, you got to look at market caps. You got to do more homework and don't look at the chart and say, oh, this stock was $160 stock and eventually it's going back there. What's the market cap of Rivian? It's still $25 billion and they are basically an EV startup here. That's a lot of money. Fisker in comparison, its market cap right now at $8 is worth only $2 billion. Yeah. So you're saying Rivian 10 times more. I mean, I don't know. I don't know about that.
I'll tell you what's
If you think
scarier
it, just
one.
real quick, and I'm going to hop. Just if you think you missed the low of lows here under $20, so you're getting a little bit of reprieve here. Maybe you can look at this 25.5, 26 area. It doesn't really seem to be moving off this news, but all right, good job, guys. I'm going to check out. I'll catch you guys later on.
All right, guys, like always, and just kind of mention what Dennis said there, just to kind of Rivian's at 25.5, but also don't forget Lucid's at 29.8. So that
They're
could be
crazy
another
valuations for EV companies, EV startups. These are startups still.
Yeah.
I mean, yeah, they're going to have
Still
real
startups.
cars, and yeah, they're going to get production out there, but these are big ticket prices you're paying for these. Like, this is not Tesla. This is, you know, maybe eventually they can grow into something bigger, but this is not Elon Musk. So
Definitely
I think
does.
when you got to look at those market caps. I think $29 billion for, you know, these companies that are just getting started. It's a lot of money to pay in this environment, when an environment where they want stocks like Oracle that make money. So that's, you know, the consideration here is you could have had this Lucid story, and we've been right. We've been bearish Lucid and Rivian forever on this show. If you've listened to the show, you know we've been saying stay away from these stocks. Does it eventually have a date back with the SPAC price at $10? Lucid? I think so. I think Lucid could eventually be back at the $10 SPAC price. It probably bounces there because that seems to be like on these old SPACs where they bounced the first time. So I think if it got down to 10, I think there'd be a trading opportunity there. It's come down a long ways, but I'm not that excited to just jump in here Lucid at this valuation and say, oh, the stock's cheap because it's off from, you know, where it was trading, you know, back in you know, November, when the stock shouldn't have been trading there in the first place.
We'll see what happens with these EVs and see if for any reason they get an increase in that EV credit to try to help them get some of these vehicles on out. We'll see you tomorrow, Dennis. Like always, keep battling on through.
We're
And let's
trying,
keep it
man.
going, man. The only way. All right, guys, that's going to do it for Pre-Market Prep, the #1 morning show. But do me a favor, guys. If you guys enjoyed seeing Mish Schneider on today and us going through the numbers live here, hit the thumbs on up. That's how you support us. And we continue doing this every single day live for free. That's what we want to continue doing right here on Benzinga's Pre-Market Prep, guys. Is always going to be on for you guys, but you guys support them by hitting that thumbs on up and sharing it with friends so that we get more people in here. Looks like we had over 2,000 people in here today. We want to grow this up to about 4,000. Let's get it out there to our friends. So definitely hit the share button down below and the subscribe button. Up next, you guys got live trading with, of course, none other than Zunaid, Lord Ryan, and Money Mitch. We'll get into some live trading action. We'll cover stocks like Redbox. We'll touch a little bit of Disney out there, American Airlines, whatever's moving. If you guys want to go ahead and talk about it, come on over there to live trading. I'll see you guys as we continue through. And don't miss my new show. It's been on now. We've had about 2 shows now. Stock Market Movers. That's at 1 p.m. Eastern. We'll have 2 great guests on, like always, every single show. And let's keep it going right here on Benzinga. And don't stop, guys. Keep working on your trading on out there. And like always, understand that sometimes it's okay just to kind of hold off and watch the markets react in a manner that you don't need to trade every single day to be into the green. I know a lot of traders get this kind of stuck in their mentality. They just need to trade every day. It's okay to kind of watch, especially on a day like today where you don't know if you're going down to continuing or if you're going to get a little bit of a relief rally. Right now, let's take a quick look at the SPY. Where are we at? Looks like we're coming on up right now. We're at 377.44. We'll see if it gets to 379 and gets above the 380 level today. Let's go. Let's keep it going and sound that alarm. Pre-Market Prep.